Hello and welcome to the Global View on this Friday. I'm Ed Regagan. Thanks for joining us again. Let's get across what's happened overnight. Plenty of news to consider, with rising oil prices having sparked a sell-off on global equity markets after Yemen's Houthis struck two Saudi oil tankers in the Red Sea, extending the Middle East war to a second major shipping choke point. Well, President Trump has vowed a major military punishment for Iran and Houthi allies, the development souring investor sentiment on Wall Street, while the NASDAQ sank more than 2%. As the latest earnings updates from large tech companies revived concerns about heavy AI spending. Investors were unimpressed by second quarter results from Alphabet, its shares losing 7% after it reported higher spending plans, while it also burned cash. Separately, Alphabet has disclosed that its stake in the AI startup Anthropic has soared to around $124 billion. Tesla, it tumbled more than 14%, its biggest drop in more than a year, as its AI spending also spooked the market. Intel reported after the bell, forecasting quarterly profit and revenue above estimates, pushing its shares up 12% in extended trade, while it's boosting spending plans over the next 2 years as an AI data center build-out increases demand for its central processing units. Advanced Micro Devices announced a raft of new products for data centers that it said will outperform those from rival Nvidia, but its shares fell on the news. Shares of Lockheed rallied after it lifted 2026 sales and profit forecasts. Thermo Fisher Scientific rallied after the medical equipment maker raised its annual profit forecast and beat estimates for second quarter results. Honeywell raised its full year profit forecast, helped by resilient demand for its industrial and building automation products. And Blackstone, the world's largest alternative asset manager, beat expectations for second quarter income as it cashed in on investments and reaped profits from bets on AI. Well, President Trump has promised to punish Iran and its Houthi allies after the Yemeni fighters struck two Saudi oil tankers in the Red Sea, effectively closing a second major shipping choke point in the Middle East. That sent global oil prices surging, while insurance costs of shipping goods through the southern Red Sea have doubled. The US military launched another round of airstrikes on Iran overnight, prompting Iran to fire at neighbouring Arab countries that host US military bases. Elsewhere, the European Central Bank has left its deposit rate on hold at 2.25%. ECB President Christine Lagarde saying risks to the inflation outlook are to the upside. The energy shock could intensify further, and its effects on other prices and wages could be stronger than currently expected. And the number of Americans seeking unemployment benefits fell last week to the lowest level since the 1960s. The benchmark 10-year Treasury yield climbing to their highest level in 18 months as the market factors in the inflationary effects of surging oil prices. The 10-year at 4.71%, the 2-year jumping to 4.36%. The Australian 3-year government bond yield futures rose to 4.7%, the 10-year at 5.1%. US dollar index up 0.5% and has climbed to a fresh 40-year high against the yen. The Aussie dollar is back to 69.7 US cents. And the Trump administration has set Australia's tariff rate at 12.5% in its new series of levies on its trading partners. The tariffs will take effect just as temporary 10% worldwide tariffs expire at 2 p.m. Eastern Australia time today. The United States Trade Representative Jamison Greer alleging that Australia had inadequately enforced bans on goods produced by forced labour. The Trump administration argues the US is doing its part to combat forced labour, but other countries are not, putting American companies at a competitive disadvantage. Deputy Prime Minister Richard Marles has told the ABC that Australia has some of the strongest laws in the world to combat the entry of goods made with forced labour. Well, oil prices settled above $100 for the first time since May, following the attack on Saudi tankers, which has further disrupted global supplies. Brent futures dumping 7% to above $100 a barrel. Goldman Sachs forecasting that Brent may exceed $120 a barrel in the fourth quarter, and average around $100 next year if the Strait of Hormuz remains disrupted through 2027, with the likelihood of higher prices if the Bab el-Mandeb Strait and Suez Canal also persist with disruptions there. Gold fell more than 2% on inflation concerns. Spot gold at around $4,050 an ounce. Copper futures down more than 2.5%. Iron ore up to $99 a tonne, and Bitcoin has fallen back to $65,000. All right, lots to consider on markets at the moment, given what's developing more globally. Let's get across the door with Brad Gastwirth from Circular Technology. Brad, welcome back to you. Let's start in the Middle East with that widening conflict we're seeing. As a result, oil back above $100. Just how much of a break will that be on risk assets?
Yeah, I mean, Andrew, not a dull day every day here in the States. I mean, we're having what, the 11th day in a row we're seeing the U.S. bombing Iran, Iran countering with bombing, neighboring Arab countries. I do not see an end to this conflict anytime soon. I think that you're going to see more risk and more volatility in financial markets over the coming weeks and months. And I think you're going to see oil prices continue to move higher here.
Well, that said, though, this comes amidst, of course, earnings results, critically with a focus on those big tech companies. We've already had Alphabet, we had Tesla. They've been negatively received. Brad, it's all coming down to the money they're spending at the moment and investors wanting to see some return there. What did you make of those results? What are you looking forward to?
Yeah, absolutely right. I mean, first of all, Alphabet, what a quarter. I mean, a huge 85% growth on the cloud side. I mean, phenomenal numbers, but then the one negative, a negative free cash flow. That is what hit the stock. Also guiding higher for their CapEx to be on average about 200 billion. Right now investors don't want to see negative cash flow. The investment side is up and to the right. I think you're going to continue to hear this trend next week with Microsoft also talking about higher CapEx, but I think you're going to see this trend continue. And I've said this, I probably sound like a broken record, but until we get true AGI, artificial general intelligence, I think you're going to see increased spend from all the majors, and I expect that next year to go even higher.
Interesting, Brad, Meta next week. Look, there was a lot of worry initially just about how much it was spending. You're perhaps arguing that they're in a pretty good position at the moment.
Yeah, I think all of these companies are between rocks and a hard place. Each one wants to be the first with AGI or ASI. That's when you have AI truly as smarter, if not smarter than humans. We're not there yet, even with the advances that we have seen. And we're going to see, these companies spend to ridiculous levels until it's achieved. So I still think we're a couple of years away. I do think you're going to see, increased spend. I think that's going to be a trend again this quarter. And I'd be shocked, if anything, if we see any cuts in spending this quarter.
So, Brad, given what you've heard thus far and the expectations of those earnings coming, plus, of course, what's going on a macro level and geopolitically, what is your view on the market, where it goes to from here?
Yeah, I mean, what a trillion-dollar question there, Andrew. I think we're going to see a lot of volatility right now in the next several months. I do not think this war in the Middle East is over anytime soon. Unfortunately, the United States is between a rock and a hard place with, starting this and then also wanting to get out. But now you have, the strait basically blocked. If you try to police it, it gets bombed. You have the Houthis and, with the Red Sea starting trouble with Saudi Arabia. I don't think we're, going to get any type of agreement anytime soon. So with that, I see higher volatility. The one thing to mention, though, Andrew, is that over the last, 24, 36 months, markets have completely ignored macro. You had the China-US stuff early on, about 36, 48 months ago. Then you had Russia-Ukraine. You had the beginning with Israel-Gaza. You had the US-Iran. I mean, the market has completely ignored some major macro events. It's going to start to pay attention, but you still have very positive trends on the AI side. I think you buy during some of these, dips. I think it's not going to be a rollover. I think you're going to be able to get things cheaper over the next few months.
So, Brad, talking about AI, what companies are spending, what return they're getting, aside from that, the technology is, of course, evolving ever so rapidly to the point we've had a major security breach just this past week. This is regarded as the hugging face incident. Just explain what happened here, because you listen to the experts, they see this as both being impressive but also alarming at the same time.
Yeah, I mean, Andrew, what an important point to bring up. I mean, this Hugging Face incident. So to just explain it briefly to the audience, you had AI agents. So you had autonomous artificial intelligence agents. So no human interaction come in and breach security of Hugging Face. They came in, they got credentials. When it was trying to get stopped by Hugging Face's it actually got around it, and it caused some major, turmoil. Now, this is unprecedented because this is an AI hack caused by AI, not by humans. Now, the concern here is if all of a sudden you have artificial intelligence coming in and hacking systems out of, without people telling you to, what's next? And how do you police this? How do you stop this? I think this is, it's a wake-up call for all companies, showing that autonomous agents are a risk. If you let them free, what can they do? And like, they're learning on their own. And what gets crazier here, Andrew, is in a year or two, when you do have the AGI or ASI on top of these autonomous agents, then you could have some real trouble. So, I mean, this is where, some of the smartest people in the world are concerned about AI. These are the things they're concerned about.
Yeah, because the focus very much on the use of data, of course, with AI, but we should forget about the need to protect it. That's where this comes in, cybersecurity. So would you expect then a greater focus, more spending on cybersecurity as a result?
Absolutely. And I think, we've seen that trend continue. But I mean, the problem here is, like, again, when you get these things to be smarter than people, so when they do get that AGI or ASI level, then all of a sudden, like, how do you even stop it? And there's some concerns. And, again, some of the early pioneers in artificial intelligence, this was some of their major concerns, is that after that Pandora's box is open, you can't close it. And when these things get that smart, they can basically take over and control things. This is the concerns when you think about sci-fi movies with police. Do the artificial intelligence police all of a sudden just take over the world because they think that's the right move? Now with this breach at Hugging Face, it was similarly, they came in, they hacked it, and they kept on moving around every time they tried to get stopped to do what they felt was best. And that's a major concern.
Brad, great to get up across the latest developments there. Thanks so much for joining us from Circular Technology.
Thanks, Andrew.
Let's turn our attention to the local market ahead of the open then. Looking to fall with SPI futures there off close to 0.6%, mirroring what we've seen on global markets overnight. Obviously, the focus very much on where that oil price has gone now back above $100, given the developments out of the Middle East, with further choke points there affecting global oil supply. And as a result, well, Australia is very much front and centre as far as those movements are concerned. In fact, that's the view of Josh Barker from Barker Wealth. We're going to catch up with him when we get underway for the open. Stay with us.